working. Awesome. There we go. Make sure this is coming in good. Can you hear me okay?
Yeah, sounds
Awesome.
great.
All right, guys, welcome. Welcome to the Market Pulse podcast. I'm your host, Matthew Pohl. I've got a new co-host for today, Nina Jorgensen. Hi, Nina.
Hello.
We have quite a stack today. Let me kind of pull that up. I know that I shared the sheet with you the other day. Let me just go over really quick with our audience what kind of our agenda is for the day. And then I've got this little disclosure that we've got to play at the beginning of this, and then we'll jump right in. So to kind of give you guys some high-level conversation pieces around what we're talking about today, Nina and I have prepped some content, and one of the first things we're going to do is go over this gold trade that we went over last week, just to kind of show you how it updated. We did have the breakout in that price. And so from a technical review, today is going to be a great opportunity to go over like how we actually dissected that trade and what you would have done had that breakout happened when you were watching it. Then we're going to do some light psychology of trading. We'll call it a lesson. This one's a really unique one in terms of talking about psychology trading cycles and understanding how the human mind and then as an effect, society kind of reacts to that. Then we've got some news. And then if we've got some time, we'll check the markets again at the end. So having said that, I'm going to throw on our disclosure and we are going to get started here right away. So let me play this for you guys and we'll get going. And then as far as the visuals and stuff go, Nina, I'm going to actually bring all those up on my side. So if you have any comments in between, or you want me to bring something back up, just know that I can toggle those on my side.
That sounds great.
All right, here we go, guys. And there's our lovely disclosures to keep our attorneys happy. Obviously, like and subscribe, guys. If you're watching this as a recorded version later, or if you haven't been on our channels, make sure to like and subscribe. All right, so let's go ahead and jump into this. Nina, thanks for being on with us. Let me kind of bring up our first topic here. So we're going to talk a little bit about this trade. I don't know if you could tell, Nina, just looking at our screenshot that I put up on the kind of our outline, what happened last week, but I'm going to pull a green chart up really quick, kind of show this unique thing that was setting up with gold for everybody. So let me get this up really quick for you guys. All right, and I should be able to share from here. As it pops in. So let's go. I'm going to grab one of my layouts. Oh no, did I lose my green chart layout? Oh no, here we go. This is right. XAU. And then as I get this up, just give it a second, guys. Sorry. It's being a little slow on my end. Boy, it's really thinking about it. Yeah, give it a sec, guys. It's just loading. Wow, my charts are being super slow. Are your charts like this, Nina?
Yeah, it's going so slow. I was just going to pause my video to see if that helped.
Oh, here, give me 2 seconds.
Could also be just time.
There we go. Okay, there we go.
That's perfect.
It's popping in. There we go. So here is that breakout. And just looking at this from a technical standpoint, let me just back this up so everyone knows what was going on. So this is gold. I'm trading it on the XAU, which is a currency-based way of trading this. So this is actually in a Forex platform, and it's written as a Forex pair. So it's gold based on the dollar. And so right now, by the way, if you're interested in buying gold, we're at a great price at this 1857. This would be a time if I was actually taking physical ownership of gold, I'd be thinking about getting it again as we've come off of the $2,000 or $2,000 ounce price. But you can see we've got this long trend going up, this short trend coming down, and because of the two colliding, these two channels colliding, we created kind of this wedge that we've been in over the last 2 weeks. And we had support at 1882, resistance at 1967. And Nina, what I was sharing with the group were these support and resistance bands, and how as this starts to tighten up inside of this channel, or this funnel, you could call it, the pressure just gets tighter, tighter, and tighter. And we finally had the breakout. It happened this week, where it went towards the short side, and had someone taken this trade towards the short side, you would have taken possibly a take profit just above your support here. You would have set your exits above. But now we're in like a whole new territory. And so what I'm going to do, I'm going to leave these lines on here, but what we want to probably be looking at, this is definitely broke out, so we can get rid of this channel now. And that channel, by the way, went way back clear into November of last year. But this is a brand new breakout. And now that we're here, we can kind of readjust our highs and lows on this channel like that. That's nice and tidy. And we're definitely in a short trend right now. And we've got support. Remember this light support, guys, that we drew in at 1848? We've got strong support at 1802. Now that we're in this kind of new, and this is a very tight channel, by the way. If we were to redraw this, I mean, we're talking, this is a pretty steep channel. So the likelihood of a breakout inside of this is pretty high. Likely to slow down at this 1848, which is kind of the soft support, but it is soft. So there's a lot of room for this to continue going down. So just from a technical standpoint, no fundamentals. We can talk fundamentals on why this went down and why the news actually drove this down. But from a technical standpoint, we're in two short trends, and you're below 1882 support. So, I mean, this still has, in my opinion, room to run. And you'd want to set probably a take profit above the 1802 level, give yourself some room, set your stop losses just above the 1882 price above this. But this is something you could scale into now. This is something you could get into later. We've already broke this. Nia, any thoughts on your side or questions about the setup from your perspective? I think you're muted.
Yep. Do you have those candles? Are they representing a day? Is that what that says?
Yeah, these are daily. This is a 1 day chart. Yep.
Yeah, so where it just is posting, it looks like it's already tested a buy and it's still retracing back down. So yeah, I
today,
agree with you totally. Like we've got room for selling still. I mean, you could shorten it down and wait for it to retrace a little bit more on the buy side and then just better positioning. But yeah, I agree.
Come into this. Yeah, I see that too. So
yeah,
let's see if I can zoom in. Nope, didn't like that. Yeah, like if you came back into this 4 hour candle.
Yeah.
Where did it come into here? High here. 79.
Yeah.
Yeah, so it's the top of it. So literally all of this happened this morning.
Yeah.
So I agree. You could get some retracement in here, get a better price.
Yeah. Well, you can see that like the bulls are trying, they're just like so timid. Yeah. They're not breaking out yet.
The challenge with Fridays, and that's a challenge with doing this today. you have most of your momentum happen early in the day, and then the traders kind of go to sleep during the evening unless there's some major announcements. And most
Yeah.
of the economic calendar, they leave everything off Friday afternoon. It's like they want everyone to go sleep well over the weekends or something. All the major
Well, they definitely
announcements
don't
don't
want any
come out.
positions like carrying over, they don't,
Right.
yeah. So, yeah, activity
So
tightens.
yeah, I agree with you. I think positioning in would be easier to do on like a Wednesday. I think this price is probably not going to move much the rest of in terms of coming back into this candle. But there's the trend, guys. So if I were to draw this, well, we can talk about it later, but this is definitely into a short side. One of the things that I like doing, let me bring this up really quick. Let's do gold on my trading view. Oh, it does not like that. And we'll bring this up again at the end, but I like looking at the overall technicals on gold also. Whoa, and everything here. Look at guys. Look at how strong this is. Strong sell, sell. All the moving averages and oscillators have moved to a really strong sell. So even though we've drawn our own technicals on this chart, I always like getting an affirmation that I did the right thing. This is showing us a pretty strong sell too. So lots of movement to the short side. I think the bears are winning and probably will win into next. I would say probably Monday or Tuesday. This trend's going to keep going. All right. Well, that's cool. Let's go into any other thoughts on that, Nina, as I move on.
Nope, I agree. I think that looks good. And yeah, everything is on the sell side for sure.
So Nina has been, as I'm transition on, give our audience a little bit of background from you, Nina, so these guys understand like how long you've been trading,
Yeah.
what kind of your background is around the markets, what markets did you like trading the most?
Yeah, so I've been trading now for, holy cow, almost 7 years, pretty full time. But just, I mean, trading isn't a full time thing, but as an actual time.
Right.
But yeah, and I traded mainly currencies to begin with, just because it was more, you can trade them late at night, you can do different things. And then as crypto kind of became more prevalent in the trading world and accepted on more platforms, I went pretty heavy into that. So the past about 3 years, I've traded almost primarily solely Bitcoin and a little bit of other cryptocurrencies. But so that's kind of my expertise or forte. And yeah, it's great. I love it. It keeps it's very conducive for someone that has very sporadic timing. I've got 4 little kids and we homeschool and do tons of other stuff. So yeah, life's crazy.
Yeah. Thank you. Yeah, I've known Nina for all of those 7 years and probably even longer.
Yeah.
And yeah, I've watched and heard some of your trading results over the years. And so it's been fun to be exposed to that. So we're moving into our psychology portion. I don't know if you had a chance to review much of this, Nina, but is there one of these images you would want to start on or one that you liked the most? I kind of was debating between these 3. So we're jumping into the psychology of trading, guys. We're going to be talking about psychology cycles. And there's 3 illustrations that I brought into this that all are actually the same, but illustrated differently. And I kind of liked them for different reasons, but I'm kind of leaning towards this, just the real simple one to start, the one without the people on it, just the lines with dots.
Yeah.
Why don't we start with that?
Yeah.
And I want to kind of go through this with you guys because this is I think it's valuable to understand the cycles of the psychology of the market. And in any hype cycle, like as we went through, even I would call it the Bitcoin craze or the crypto craze, and now the AI craze. every market goes through this kind of this cycle where it always overshoots where it's going to land. It just always does. And it starts with some level of optimism where the market goes into an idea, like what we're going through now with AI, but did with like crypto. And it's like, oh, we have this new way, let's talk crypto. The optimism would be like, oh, this is a great idea to secure up, non-fungible ideas and having really pure record keeping and having something decentralized. And then, people got excited about it. We went through this excitement phase of crypto where there's memes and Elon was getting on and talking about stuff. And then we go through the thrill of, the market's doing well, the value of your crypto is going up. And then we hit this point of euphoria where people are millionaires out of nowhere. A lot of luck happened in the market. And then things started topping off and the highs weren't there as high as they were before. And, Bitcoin came off of its, $60,000 highs and Ethereum started, and then people got nervous and started wondering, is this going to come back? Are we going to be able to hold through this? And then people go into denial, like, oh, there's no way Bitcoin's going to drop. The dollar's crap. And, the system we have is broken. And then people start to realize like, oh, maybe the system's not as broke as we thought it was. And they start getting a little scared about their Bitcoin holdings or crypto holdings or their NFTs that they bought that were just images on a computer for $500,000, right? And then people start panicking. They start selling. The capitulation starts to happen. And then the desperation typically doesn't happen until there's like a recession. And that can be in a market, but also actual overall markets can force these in all markets. And that's where people will get to a point. And this shows more of the emotional. The stock market actually reacts, I think, worse than this once we get to desperation. Because once you're at desperation, everyone, like there's blood in the streets. People will sell you their stock for a loaf of bread. They'll sell their stock to keep their house, right? And so from a market standpoint, we're not quite there, but I would say, you could say that the crypto market went through this phase and then it started to recover a little bit and people went, no, it's bad. Yeah, maybe it wasn't worth 60,000, but now we're at like 20s with Bitcoin, but there's still a application for this. And then, the hope, the relief, and the optimism starts to kick in. What's been your experience, Nina, with like your time in the market and experiencing kind of these, whether they're personal waves or watching the market as a whole and how it reacts? Like, what's been your experience kind of seeing this chart and your personal trading?
Yeah, well, and I think if I were creating this chart, I would add one missing piece called confusion. Because
okay. Where does that one fit?
Probably between fear and panic. Because it's like there's this point that you hit where once you're, maybe only if you've ever done technical trading, because especially right now with BlackRock trying to do the Bitcoin ETF and all these different things with crypto, not knowing how it's going to be adopted or not be adopted or regulated, and not knowing what the value of the dollar is going to be. There's a lot of confusing pieces that like almost put things at a standstill.
Yeah.
Like everyone's just almost holding their breath, trying to see, okay, what's going to happen next. So as when I was an earlier trader and you get through that, right? When you don't necessarily have that much wherewithal and you're just looking at and going through the motions, it's like you ride the high of, yay, you won something, but then that crash, if you lose, is so much more overpowering for most people. And I think the few that transfer through and actually are able to stick to their fundamentals and not let that crash overwhelm are the ones that have an understanding that that's what they're going to experience and can kind of get ahead of it.
Yeah. And
go from a place of, I'm not going to worry about that one loss because mathematically knowing what's going to come next, that loss won't mean anything.
Yeah, I like this illustration because I think the visual kind of explains the middle without saying
Totally.
confusion. Because you go through like this fear to desperation, and it's
Yeah.
like confusion feels very similar to this, where this guy in desperation, his head looks like he's blowing up and he's sweating out of his armpits, right?
Right.
And it's like, yeah, confusion does kind of feel that way. And what's interesting is what's right next to it, this panic and capitulation,
Yeah.
where it seems like confusion, it is kind of a settling, it's like the beginning of a settling point.
Right.
It's like, but like there's still stuff moving, but I'm confused about it. And I would say I've been there, at least as from the market as a whole standpoint. The hardest thing to calculate with the last move we've had in the market has been inflation. And that
Yeah.
data, the inflation effect has skewed all of the typical indicator numbers, right? So when you're looking at like unemployment, it's like, well, yeah, it's being skewed by inflation. If you look at the value of homes, it's like, yeah, that's being skewed by inflation. The value of the market, that's being skewed by inflation. So everything looks great on paper, but it's like, but inflation's kind of this hidden thing that I would say is kind of causing this. What's going on? Yeah, so I like that confusion piece. I'm going to bring up this last chart just because this is kind of like the heavy one. I
Yeah, because
wondered.
it's almost like the public right now, we know the inflation numbers that they're posting are such bull. Like we know that's not as lived or accurate.
Oh
And
yeah,
so
you mean like inflation versus true inflation?
yeah,
Yeah,
totally.
yeah,
Yeah. Yeah. So it's like, no, you're not. I grocery shop. I know I can't leave the store even if I'm running in for two things for less than $50. So like, yeah, no, you're not telling me it's at, 7% or whatever. But anyway, so
yeah.
it
Well, and
leads us.
there's a lot that they keep out of that inflation number. So like fuel
Totally.
prices aren't included, the price of homes aren't included. Um, I mean, you know this. We've gone through a 200% increase in homes over 20 years, and inflation doesn't show that number at all.
Yeah, wages don't show that number at all. So it's like we know we're being duped, right? Like the consumer
Totally.
knows. And so that has us being like, again, in that state of you're not sure where to move because you don't know the when it's gonna unveil, like when it's actually gonna hit the fan.
Yeah. Yeah, I love that. Yeah, I want to go through this chart really quick just because the thing that I liked about this one compared to all the others is this is probably more what it looks like in the market, right? Like in terms of like price. But I
Yeah.
like the things it says because then you find like what it means to be complacent. Oh, we just need to cool off for the next rally. Like, oh, that's what complacency sounds like, or anxiety. Why am I getting margin calls? This dip is taking longer than expected. I think feel like because I've been short in the market for a little while, and I feel like I'm like living right in here, this anxiety denial. As the
Yeah.
market's starting to drop down, it's like, wait, why is this taking so freaking long? Why isn't it happened yet? Right. But
Yeah.
I guess I'm positioned into the negative. So I'm kind of like wondering why it hasn't happened yet. So I might be
Yeah.
anxiety into the wrong side. Um, but yeah, anyways, this is a little different spin, guys. I wanted to bring this in as like this. The reason we talk psychology, and Nina, you'd probably agree with this, but the reason I want to bring psychology into every conversation on Friday is the markets are an accumulative pulse of society and society's psychology. So like if you took the average, weight of like what society believes about the market, the psychological belief of the market, the price reflects that psychology. And so in a way, the price of the market is the pulse of human psychology for whatever market. In the US, the S&P 500 or the Wilshire 3000, it could be either of those. Or if it's tech companies, it's going to be the NASDAQ, right? Or if it's one stock in general, it's going to be that single stock. But I found that if you can start to master your mind and understand how the mind reacts, then you start to get the benefit of seeing how the market as a whole will react also. And as long as you can be with reality, as long as you can be true to yourself around like, this is real and this is how humans will react to things, then you can find opportunities. And that's what making profits in the market's all about. It's about finding maybe the denial season that we go through and taking advantage of it when other people just they don't believe that we're going into the next rally. They don't believe that we're going into a recession or that there'll be price withdrawals. But anyways, I would say that the greatest thing that I did for my personal trading was doing deep work in psychology, like understanding how my personal brain worked. And I don't know, Nina, if you have any experience with that or not that you'd want to share with our audience, but for me, the thing that was the most impactful in my trading, I would say my business, also personal life, all that other stuff, it benefited also, was psychology. It was learning how the human mind works, and then when it reacts to things, what to expect. For every action, there's an equal reaction. Well, when I react to the market, what kind of reaction or response do I get back?
Yeah, no, 100%. I think that I would say that's probably been the biggest takeaway in the years that I've been a trader is there's nothing that holds that mirror up to you better than when you're working that intimately, where all there is you, a screen, and dollars and cents, right? And knowing how you show up in reaction to what's going on. And like, I'm experiencing that even now. So like, if we speak specifically to Bitcoin, right? And, end of last year, it hits its all-time high at 69,000 and then plummets and just drops the whole time. Even now, there's part of me that's like, oh crap, maybe I should sell low, like obviously I'm not going to because I'm above that, but it's like even an experienced trader, you're going to get that feeling where it's like you want to react and not be in control anymore. And having awareness around that and knowing how to combat that is the only way you're going to not fall victim to it. Because otherwise you will be one of the ones that just gets blown out of the water with everything else that's happening in the market, because we're just small little fish, at the end of the day.
Agreed. So, well, let's transition into our news segment. I want to show this to you guys, and I appreciate what you said, Nina, because I think it transitions into this well. So we're going from how we react to the market to some pretty big news that I think the world is going to start reacting to. And on some levels, it's surprising that it hasn't responded this way, but I just want to get you guys the what is around the market. And there's a lot of talk right now about a government shutdown, and Goldman Sachs this week came out with a statement, and you can see in this article that there statistically is a 90% chance, based on all the inputs that they've put in, there's a 90% chance of a government shutdown coming up. Now, there's been a lot of politicians talking about this and a lot of jokes about, oh, well, we got to make sure we make it through the holidays. And it's just like, I mean, excuse my French, guys, but it's just a complete shit show that I have to show up to work for my employees. My employees are expected to show up to work on time, and they have deadlines, and deadlines aren't hit. People get fired. But for some reason in our government, we still allow these shutdowns to happen. And if this was the private sector, they would be completely out of business. But anyways, that's another topic for another time. But what we're dealing with is a shutdown. And because of government shutdowns, there's typically a market reaction to this. And so I'm looking to give you guys some tips, some real trader insider information on like what actually happens after a government shutdown and what's typical. How does the market typically react to this, so that you guys know how to position yourself the next couple of weeks? As you saw the news on this, Nina, what was kind of your initial reaction to this?
Well, as someone that's not really in the government, it's always like, oh, who cares? But now that I'm trading there, that's very different, right? Because we see a lot of the economic turmoil that it creates in the grand scheme, and then trickles down to what impacts me in my, because that's really, if we're being honest, that's really the only time we notice things is when it impacts us, right? And so for a lot of people, I think sometimes the government shutdown doesn't until far after it happens, and they get the ripple effect, where traders or actual government employees get it right when it happens, because that's when their point of impact is.
Right.
And so looking at it, I'm still a little bit torn though, because they don't have any fail-safe for our military and our defense in order. So there's part of me that's like 90% might be too generous, that it's for sure going to happen if our military's out in the wind and they're not going to get funded. There's part of me that's having a hard time believing that they're going to let that happen, but I don't know.
I just rewatched the Big Short. Have you seen that movie?
Yeah.
And it's doing it. I can't help but recall the moment where they're stacking the cubes. I don't even, what's that, Jenga, right? It's Jenga.
Yeah.
But they've renamed it. They put like credit ratings on the side of the blocks, and he stacked them, and it goes from C rating to B rating to A rating. And by the way, guys, what we're talking about is like Finch ratings. So like Finch goes out and rates banks, it ranks certain portfolios, investment vehicles, but it also ranks bonds. So like government issued bonds. And I couldn't help but think of the US debt degrading, and how they were going in, they were looking at these, sections of bonds that were getting AAA rated by Finch. And he's going, these are crap. Like, he even walked in and sat down with the lady. He was like, how are you rating these? And she's like, well, if we don't give them AAA ratings, they'll go to Moody's and they'll pay for them over there. And so they're incentivized to give them these high ratings. Right. And I was listening to a guy that I respect very much in the markets, Chamath Palihapitiya, he has his own podcast. He does the All On podcast. And he talked about these Finch ratings being like 3 years old. Yeah. Meaning that, because we just went from AAA, the US dollar, our treasuries went from AAA to AA just in the last month, which is the biggest downgrade we've had in a long time. And guys like Chamath are saying, well, that's actually 3 years old. We should have downgraded that 3 years ago. So it's like, where are we really in our grading with US bonds? And how it just has me think, like, how bad is this house of cards? And when is this thing going to fall apart? Because we're pretending that our solvency as a country is way better than it actually is. And we're just not. Maybe we're trying not to create public panic. I don't know. What's the gameplay here? Well,
it's got to be that. It's like when you want to be, if let's say you're a company, right, and you're public on the market, and you want to pretend like things are better than they are, so your overall stock doesn't drop and your value doesn't drop, right? That's what we're doing we're playing that on a global scale. Like, we're trying to show that to everyone else that, no, we're fine. We're in all this debt. We don't have our shit together. We don't know what we're doing, but we're fine. It's good. And eventually you're going to have to, you got to call a spade a spade. We're in trouble. And the only reason you aren't coming after us saying we're in trouble is because our guns are bigger than yours for now.
Right.
And so it's like, that is what it is.
No, that's a good point. It's like you're saying our strongest, it's like we're all muscle. We're all bark, no bite, and our bark just got weaker. Like, the one thing that we have as a country, which is our defense, our military aid, we basically just completely handicapped it.
Exactly. So if they shut down, it's why I keep thinking, I'm like, they're going to do something to delay this. I'm like, if you shut down with the one thing we've got right now that's keeping, everyone at bay, that's not going to work. It's going to make us crumble even more. And I'm like, I don't see any logic behind doing that for what they're doing it for. It makes no sense.
Yeah, agreed. Let's check out this data, Nina. So this first, I've got 4 different illustrations I want to show our audience, but this first one is a screenshot of GDP hit and quarterly annualized rates. So this is duration of shutdown by weeks based on percentage points. So this is like a tool that I discovered more recently after having some shutdowns in my trading experience. And by the way, for a lot of traders, this may be their first time they've ever experienced a government shutdown while trading. And so this is just
could be if you're newer to the game.
Yeah, it's very likely this may be your first one. Just like I would say most traders don't even have the benefit of a recession under their belt. You've had to be trading for 16 years to have traded through the last, which is crazy. The longest cycle we've had in a long time.
Yeah, it's nuts.
But here's a chart that shows the percentage in a drop in GDP by weeks in shutdown. So obviously it makes a lot of sense. The longer the government shut down, the more percentage in GDP we lose. And a lot of this has to do with what you're talking about. There's a percentage of, I think the government makes up 24% of total GDP. And so total GDP as a measurement, the government makes up a quarter of that. And so if we shut that down, there's obviously going to be an impact in GDP. And so the news we want to hear as an economy is that it shuts down. This 90% chance only happens for like a week, because then we only lose, not even a full percentage. But if we go into 4 weeks of the government being shut down, that's a full % drop in GDP, which you can just count on affecting the market as a whole. We're talking S&P 500. We're talking NASDAQ for sure. We're talking, obviously the Russell 3000. All stocks will be impacted by this in a negative way. Where should we go next with it? Let's take it to this illustration. Did you have a chance to look at this, Nina?
No, I don't think that one's on my little sheet you sent. Or maybe
it may not have. Yeah, I may not have included it. I just found this one, but check this out. This is partial funding during prior shutdowns has reduced the hit to growth. So this so this basically shows the last 4 times we shut down, which, by the way, 95, that was awful, right? That was right during Clinton's scandal, was the winter of 95. And you could see the duration in light blue and then the impact in dark blue. So 95, we had a short shutdown in terms of business days. December was a little longer, but the impact to GDP was, about 1%, or 0.1%, excuse me. But in October, we had about the same length, but way more impact. Like GDP took a huge dive in the 2013. And this was like post, what was this? Post September 11th. So this was, gosh, when was that? What was happening in October 2013?
That's a good question.
I don't know why I don't remember that. I was trading during that time. I don't remember that. I also don't. I remember December 2018s. But you can see we had a really long period, but a really short period, or a very short impact in GDP. So this just shows, regardless of how you want to look at it, we do not have positive GDP growth anytime there's a shutdown. Otherwise, we'd have that into these blue boxes would be into the negative. So I thought that was an interesting chart.
Yeah. Well, it's interesting that sometimes people, even though it can shut down for a short amount of time, like look at October, and it had a bigger impact. And it's tough to say if it happens this time, just knowing what's not allocated already, it could be bad.
Yeah. Well, we just went through increasing the debt ceiling, and somehow we already don't have our budget figured. I just don't get it.
It's like, how did you just say we can spend way more money and you're not saying where we can spend it? How did because shouldn't you have had that in order to say you can spend more money? Generally, if my kids want a raise or whatever, or an employee or anyone, and they're going to say, hey, I need more money, you say, well, why are you getting more money and what are you going to use it for?
Yeah. Well,
Like,
I think it was, well, I think it was Warren Buffett that said this. He's like, I can fix this problem. He said, the moment that we can't pay our bills, everyone in Congress is up for re-election. Everyone.
instantly.
Yeah.
Yep.
So it's like, you want to fix the problem, you have to incentivize the carrot. And unfortunately, our political process is not incentivized to lower spending. I mean, we buy votes by spending and giving
the last ones
favors.
to actually feel it. So like you said, if we're running off of actual incentive, and it's so nice of us to think that they actually care about doing what's right for us. It's like, no, at the end of the day, they care about their own wallets and their own pockets.
And getting voted. For sure.
And we all do. We all need to take care of our house first. I get that. But it's like, put their job on the line. They'll care.
Yeah. Well, unfortunately, guys, we're not here to solve all political problems. And until Nina runs for president, that's not going to happen.
But we could though. No,
yeah.
I know.
So I mean, clearly we've got some problems outside of our control there, but we have a spending problem. I heard Ray Dalio recently comment on this debt spiral, and I think this is what he's talking about. We increased the ceiling. We're already running out of money, even after a ceiling increase. The government's 90% likely to just shut down again. So what are we going to do? We're going to have to print more money. And then, it's like a never ending problem. And then we wonder why we have inflation. And it's like, when are we actually going to when is this administration going to actually deal with like, hey, we got to cut some bills? Not just that. And I'm not going to try to get political on this show, but this administration has signed off on billions of dollars through people that weren't even authorized to sign off on giving that money away. Like that's the other thing that's happened during this last presidential election, this last cycle. We are seeing spending and a lack of accountability around spending unlike any time we've ever seen before. And it's happening because we've like gone to this T level, the trillion level. Oh, giving a couple $1 billion away, that's not a big deal. While, like you said, people at the grocery stores they're really struggling.
Well,
here's this chart, just to move through this really quick. I don't know if you made sense of this or not, Nina, but the way I understand this chart, this intersection at 0 days, if you guys go to the bottom of the chart, to 0 in terms of percent, or the positive or negative, kind of create this apex. And the apex point is really what happens after a shutdown. Right. So anything from the right of that dotted line is kind of the impact of every shutdown we had in 95 to 96, the 2013 shutdown, and the 2018 shutdown. So we're just showing you what's happened in the past. And every time before a shutdown, so like the news coming, which makes sense. Like if you know that there's going to be a shutdown, people start reacting now. But even after, there's been like almost 100% of the time a light drawdown days after, like as the shutdown happened. And then there's a recovery. So that's an interesting piece to note also. So like there's like this 5, maybe even you could say it's kind of even flat. Like if I were looking at this historically, it goes kind of flat into like 7 business days. But then after about a week, you could say, or 7 business days, then everything actually starts to recover. Like, oh, we thought that was going to be, the market thought that was going to be way worse than it actually was. Right. And so I think there's some really great insight here. One is short-term sell, long-term, mid-term, even like probably what would that be? Mid-October, maybe mid to late October. It's like, this might be a great opportunity to get back into the market.
Right. Yeah. It's always good. The nice thing about panic is it does create a lot of movement. And people react way more when they're scared than when they do when they're happy. And
what's the VIX at right now? Do you follow the VIX much?
No.
Yeah, I'm curious what the VIX is at. I wonder if it's spiking now.
I'm sure.
Yeah, I'm gonna check.
Let's see. Yeah. I mean, it's back up to 16.
Oh yeah. Yeah, so the
Yeah.
VIX is climbing. So this makes sense. I mean, it's still on an all-time low, but it is starting to spike up a little bit. I think people are getting a little concerned. This is that confusion phase. You know, you go back to that psychology moment, and it's
Yeah.
like, okay, guys, based on everything we just said, where are we at in this cycle? Let's see if I can bring it back up. This is an interesting.
Well, and try and figure out, because
like, where are we in this?
when I check in, I try and see where I'm checking in at, and then where fundamentally I can see the whatever I'm trading at is checking in at, you know, because those are often, they can be different, and
Right.
hopefully they're different. Otherwise, you're just, you know.
Yeah, it seems like I would say the general market is like living in this complacency area still.
Yeah.
I mean, based on the VIX, the VIX is a great indicator to show how much, like when there's high volatility, we're down in here. We're down in panic, right?
Yeah.
If you go back to the VIX during 2020, when it started hitting like 60, right, 70, people were getting scared. Unemployment was going through the roof. People thought they were going to die. The world was going to end. That's when this happened, right?
Yeah.
It just seemed like from a societal place, it seems like complacency is where we're at. For me, I think I'm probably more in this denial panic phase where every piece of news I get is always worse. I've not gotten a good piece of data this whole year. It's like, just give me one good piece of data that says things are going to get better. And it's like, inflation's coming down. I guess that's good data.
Well, so they say.
Yeah.
Because that's the thing you got to look at, as lived, is it coming down?
Yeah.
And for most, I would say that's not the case.
It's not coming back, if that's what you're saying.
Yeah,
it's like,
exactly. Like,
we're not going to have
we
deflation.
may not have, like, you know, $8 eggs anymore, but I'm like, it's not down. And when you look statistically just at the rate of how much more expensive things are versus how much the average income has gone up, the math ain't mathing. Like, it's not working out. Like, I don't understand how we haven't hit that point where something's got to give.
Right.
It's insane to me. So yeah, I think we are definitely at that complacency or confusion or whatever you want to call it point where people just they're not really sure what to do, and so they're doing nothing. So it's just like standstill.
Yeah, agreed. I think this is a good opportunity. We could transition to this ISM, purchasing manufacturers or managers. Yeah. Excuse me. The reason I like this, by the way, and as I go through laying out for you guys kind of our topics, when I went through the government shutdown, my immediate response is like, okay, how do I make sure I check myself, right? How do I, before I go short on the market this week, and because I mean, this is what fundamentals are telling us right now, is like, it's very likely, I mean, you guys saw this chart. Let me show it to you one more time. This is it. No, that's treasury year bonds. Let me show you the actual S&P. But as we looked at this, on the S&P, this chart shows we're coming into a shutdown, and both the odds of it going down. So you can almost see in every line up to apex, we were either coming up, went above, and then started right before, you know, maybe they got the announcement 5 days before, 3 days before, who knows? But right up until the announcement that they're like, yeah, government's shutting down, the market started going down before. So there's kind of like this 3 to 4 day before, like, yeah, this is happening. I would say that's happening now with Goldman Sachs assessment. They're basically saying like it's going to happen. So I would imagine that reaction is getting put into the market today. And then we're going to have some slow, you know, pull off afterwards, just betting the odds, betting the likelihood of what's going on here. So having said that, the reason I went to ISM on purchasing managers is this is a report that really gives us an idea of GDP. It gives us real data around PMI that, like, how can I measure how well the country's actually doing? And it goes back to what I was telling Nina, like the data is just not good, guys. It
No.
just is, it's worse every time I look. So let me pull up these two charts. Let's start with the ISM.
Well, and that's what, there was one argument as I was looking last night about the shutdown, right? Where they're like, sometimes the government has to decide, you know, the better worse, because if they do shut down, then there's no economic data that's coming out. So if the inflation report is anticipated to be worse, them not having to post that could be worth it to them for shutting down and taking the smaller hit on the GDP. So it's kind of like they toss it up and see which one will be worse for us. Really.
Hide it. Interesting.
Yes. Yeah.
Yeah. Well, I mean, China's doing that. China has recently pulled their unemployment numbers, so they don't exist anymore as of this year, which is, it's like, come on, guys, that doesn't make it look better. Like, you hiding it is like a child hiding the chocolate on their face after eating the cake. It's like, come on, we know now you're in trouble.
Like we see the evidence is clear. You just made it worse.
But that is less clear for sure. I didn't consider that maybe a shutdown's a way to hide some data. And you're right. It would do that for that time period.
Yeah. So they could just be throwing it out there that it's like taking the gamble. Is shutting down for a week going to impact the GDP more or less than us posting data that we don't want seen?
You know, I just don't think they're that smart.
That's true.
I just don't. Yeah. You know, we have this, and I'm not trying to be argumentative, but we have this thing where, like, as humans, we think the government's out to get us. And trust me, my involvement in politics came from that place too, where I was just like, these people are out to get us. And so I got involved to find out. And really what I found out is that these are just normal humans, and frankly, not very intelligent in a lot of ways. And so it's comforting to know that we have a bunch of idiots running our country, because then it's like, well, they're not trying to con us. But at the same time, money is the motivator. And I think we give it too much credit sometimes that they're these cabals and secret societies running the country, when it's like, no, it's just money. It's mostly just. Yeah,
it is. Yeah, I agree with that. It's always money. It's always what we're getting.
So here's the ISM Purchasing Managers Index, the PMI. The only thing I want to bring up is this 50% line is the one to be watching, guys. And since 2020, you can see, like, here's the COVID crash at 2020. We were already there. It was almost like COVID gave us a good excuse to dump a ton of cash into the system, into a market that was already crashing, because we were already tanking pre-COVID. We were already below 50 pre-COVID, which means GDP, the markets, the general economy was already kind of crashing or coming to a slowdown pre-COVID. Then COVID happened, it threw us way into this bottom. Then we threw a ton of cash into it, and it obviously climbed us back up. We've been below 50 for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 months.
Wow.
And we are showing some incline in manufacturing, but this isn't great data. We're in a downtrend, and it's what I wouldn't expect this time, and I don't know what your thoughts are on this, Nina, but from a US perspective, I don't see us doing stimulus, because we've got an election coming up. And if we see a ton of extra spending, which will likely cause inflation, I think that'll be a massive talking point politically that our people we're voting for this next round don't want to have on them. So I think financial solvency will be a topic this next election. So I actually don't think we're going to see another spike like this, because we're not going to dump a ton of cash into the system like we did before. Your thoughts, Nina?
No, I agree with that. And I would add the student loan, the moratorium on that ends October 1st too. So not only will we have less, because I agree, I don't think we're getting another stimulus. I don't think there's that fail safe coming. And when people have to start making those payments, and let's say the government is shut down and they don't understand, like, or have questions about that, because the payment will still be due, but they can't call, they can't work anything out, they can't extend, they have no leniency either.
Right.
And so going into that, plus going into the most expensive quarter of the year with holidays for people, this is going to be a very interesting dynamic.
Yeah. Yeah. Not to mention, September is historically a negative month of the year.
Totally.
And pre-election Septembers are historically a negative. So we've got a lot of things stacked up against us this month. Call it bad omens, right? But I mean, it's just timing. It's just the timing market.
It's just like this crazy threat. Yeah, there's a bunch of them.
I think this chart just reiterates what we've already been saying, but I want to show our audience this before we get off. This is Michigan's consumer sentiment index, and this is a measurement of it's like a way they survey the public to get the sentiment around how the market's doing. And you can see since even 2000s, pre-COVID, we think generally speaking, the US thinks the market is worse than it was at the low of COVID. That's where we're at right now. So what is interesting is this isn't a surprise. Like, people typically, like when we had the housing crash, that bubble that popped, most people were oblivious to it. And that's why it got so big and then popped, is people just everyone thought, it was roses and and sentiment was insanely high. We're not seeing that now. The sentiment is not high, but the markets are. It's kind of this backwards thing that's happening. So I don't know what to make of it. I don't know. I mean, sentiment and trust in the market obviously is a necessity to keep the markets up. But when you've got sentiment down and the market's still up, it's like, I don't know what's going on, right?
That's an interesting perspective, because it's like, what's causing that flip? And maybe it's just that there's more people, managing their own funds in the market or relying on it less. Does that make sense? So like they're out there getting money in a lot of different other areas. And so the reliance on, maybe we're just more real with it, that, hey, our retirement's going to look very different than what we thought it was going to. And so we're going to have to get more creative and more responsible around where that money's coming from. Right.
Yeah. So, I mean, guys, as far as the market goes, this has been a pretty negative week. I have no positive news for you. I have nothing that says we're at a bottom. If anything, there's a lot pointing towards the negative. Having said that, we've got a couple seconds left. Let's just pull up our charts really quick. I want to move over to gold, or I want to move out of gold and into S&P real quick. And I just want to show you guys an S&P chart. Let's just bring up a new chart here. I don't know if you've been watching the S&P recently.
Yeah.
But I'm active right now in the S&P. And so it obviously keeps my attention.
Yeah.
Let's go check out a daily real quick. Give it a second to load. The reason for this is, if we're going to be shorting the market, guys, you're going to want to have a pretty good idea what the market's going to be doing. Put a 4-hour on this. Weekly. Let's get the data to load. It's always a lot with the webinar running in the background. It's like, gosh, all this data has to load. Okay, here we go. But here we are, guys, on the S&P 500. And I just want to do this really quick. And Nina, you can check my homework, or you can check my work on this. But I'm going to go in and just back this way up, get some support and resistance levels in. Let's see if I can get a good price here. Whoa. 6.2. So this is earlier into the year. Yeah, I like this. I like the 4,000. I mean, it's really testing this 4,000 level.
Yeah.
It's even, but I'm going to bring it up a little bit to this 40-30. We definitely have support there. Looks like we've got support off this old high here, which is why we're bouncing off the 4,300. I'll actually move these up. Let's put our support in green. So I'm going to mark the 4,000 because that's going to be a support regardless.
Yeah.
This was just above that here. And then there was kind of one here, but we're so far above it. I'm not that concerned about this. Let's see how this looks like. We've had a breakout in this. I'm going to bring that into a 4-hour chart real quick.
Yeah.
Yeah, it looks like we've broken out of that just about. I mean, it's really close. It's coming off the highs.
Yeah, it tested it and then it got scared.
Yeah, it's tested this high. Guys, this is a really solid. I know it's Friday, but when I see stuff like this, we're already in a short trend. I mean, you could see the trend even coming way back into here. Like we could probably grab it from even the high. Probably take this whole thing. Yeah, see, we've broken out of this low even.
Yeah.
So this isn't valid anymore. I mean, we're in short trend here, short trend here. We could go into trading view real quick and look at the technicals. I bet you we're getting a ton of short signals, but this is what interests me the most is, like you said, Nina, it tested this high here.
Yeah. And then it closed with a really solid red. So it's like, oh.
Well, this is active right now. So it's testing.
Oh, it hasn't closed.
Yeah, we're still open today. So I mean, this is going to run for another 4 hours. So I mean, guys, this is probably Sunday, like Monday morning, if I were to guess, just based off, and I'm not guessing, I'm just using deduction. But if I were to project where this is going to be tomorrow or into Monday, it's going to be here. So it's Monday's candle. If I were to draw it, it's likely going to be right there.
Yeah.
And the reason is because of the support. And I mean, we just gave you all the fundamentals. I mean, Nina and I just went over, like, fundamentally the market, which is the S&P 500, kind of represents the whole market. The market does not like the shutdown idea. It doesn't like September. And we're technically sitting on a nonlinear resistance level right now.
Well, and we know that the positive or the bullish reaction we're seeing was probably from the cooled inflation report. It wasn't as bad as people were anticipating. And so they're excited, but that's all going to come to a crash with shutdown. So it's like all this did was buy you better positioning if you are going to short it.
And you got it. There was at least a week of good, I mean, not solid movement up, but like, you know, good volatility up and down.
Grounds. Yeah. You can make something off of that for sure.
Yeah, I would say this is a pretty strong position short. Let me pull this up really quick on here and see what it shows. I think I have this saved. Yep. So we're sell, neutral on oscillators, really strong on the moving averages. So if we brought up moving average, I mean, keep your, so this is what I look at too, guys, when I'm looking at like, okay, yeah, it says sell, but it's like, okay, we got to get time period. This is on a daily, so that's beneficial. 4 hour, we might want to look at, but you can see 10-day moving average sell, 20-day sell, 30 sell. It doesn't go into a buy until you get to like 200. And that's like a trade you're going to hold for half a year. So, I mean,
Yeah.
obviously that's not something I'm interested in. Well, this was
Especially
fun.
when you're going to have that much more selling by the time it buys back up to where you bought.
Yeah, agreed.
Yeah, good luck.
Right. Well, Nina, this has been fun having you on. Any thoughts, comments for our audience before we jump off? I know we went a little long here.
My only thought would be, I think sometimes when you're feeling the heat or the negativity of the news, remember that you can leverage anything in your favor, especially as a trader. So the awareness that comes from the market, just find your angle and find a way to leverage it so that, you know, it's working for you, even if it's if it seems like it's against.
Yeah. Yeah, that's great advice. This little guy, he agrees.
He woke up.
He's like, yeah, don't let the news get you down.
Yeah. See, no, we're not. I'm not. Yeah.
Thanks, Nina. Hey, good to see you.
It was good to see you too. Bye. Thanks for having me.
Yeah, thanks. Thanks, guys. And we'll see you soon.